Hello, everybody, and welcome to the National Real Estate Post. I, of course, am Frank Array, and I'm here with my good friend, Tom Hutchins from Angel Oak Mortgage Solutions. How are you today, Tom?
Awesome. Thanks, Frank. Glad to be here.
Great. Hey, wanted to talk to you and get you on the show because, our MBA just went down not too long ago in Denver, right? Yep. And yes. One of their guys did an article, a guy named Lloyd Sand, and he released it on the 31st. And he did an article about the event, and he had his top takeaways from the event. And the third takeaway that he had was regarding non-QM lending, and he said that non-QM lending is expected to double in volume in 2018, and that's across all channels, and everybody's gearing up to do more of that. And so my first question for you today would be, why do you think, in your opinion, why do you think that it's going to double in size in 2018? Especially, and I also want you to touch base on, in the past, non-QM lenders, as a loan originator, you couldn't get paid that much on them. They were doing flat fees or maybe just 1%. But now I think at Angel Oak, you guys are doing 2.75 up to 3 to pay. But and I don't believe that alone is the reason why it would double by any means. But what are your thoughts on why do you think they believe that non-QM is going to double in 2018?
Well, I was also at the MBA in Denver, and I would absolutely agree. In fact, I would probably say that might be a little light. I think it could more than double.
Wow.
I think there is so much opportunity in this space, and really we've been doing this, and just so people know, Angel Oak Mortgage Solutions, all we do is non-agency, non-QM loans. We don't do any of the Fannie Mae or government loans. So we're focused on this, but we've been doing it exclusively for over 4 years. But we've really seen the market accept non-QM more so than ever before. This event in Denver, I've told people that prior to this MBA, it was a lot of us educating people, telling them the benefits of doing non-QM, but that has changed. Now people are actually doing non-QM. Now they want to do it better, and they want to do more of it. And so that's the conversations have completely changed. And I think I heard you and Brian say a few months ago that, hey, this is happening with or without you, so it might as well be with you. And that was a very true statement. And we're seeing it every day in our business, but we're seeing it in what is happening just in general in the market. So,
okay.
Kind of a long answer, but I think doubling is absolutely going to occur.
Okay, and so a lot of it, obviously, like you said, is there's a certain level of education these days to where the understanding is now finally coming to light of, because non-QM continually still gets put into that subprime category, which it is not. Yes. Subprime. Real briefly, for those who, and the off chance that somebody doesn't get the difference between subprime and QM, for the sake of the show, briefly, the difference between non-QM, which is Angel Oak, and which is the market that's going to more than double in 2018, versus the old subprime, just real briefly.
Yeah, so I think there's a number of things. To me, the critical piece is, for those that remember pre-crisis, skin in the game. We talk about that all the time. Pre-crisis, we remember loans were 100%. Every loan, it seemed, was 100% loan. That's not the case anymore. We will lend up to 90% loan to value, but our average loan to value is under 80. So borrowers are coming to the closing table with their own money. So performance is there because these borrowers have skin in the game. The second thing, most important, just as important, I would say equally, is every loan that we originate has a documented ability to repay. So everybody remembers, not only do we have 100% loans, but what did we have? No doc loans, stated income.
Right.
Those loans do not exist anymore. We have to have a documented ability to repay.
Right.
So you put skin in the game, documented ability to repay. Those are good loans.
Yeah.
Those are good borrowers. Now, they might have a credit blemish on their credit in their credit history or a credit event that occurred, but they today have righted the ship. They have the ability to repay, and they're bringing basically, their own equity to the closing table.
Gotcha. Okay, so that would be the inherent difference there, is we definitely have with non-QM, just to be double sure you understand, these people have the ability to repay. They're making sure they've got the ability to repay. They're making sure there's some skin in the game, that type of thing. So it's a different animal. And with it poised to at least double or even more than double going into 2018, obviously, as an originator, we're going to want to be a part of that movement and a part of that market because it's there and it's going to happen with or without you. Interesting, we did a podcast yesterday, Brian and I, and it was a live podcast, and we were talking about a whole bunch of stuff. Non-QM actually came up, we were talking about that. And we were looking at, in this big conversation, we were looking at, well, what's the average age of a home buyer today? And we found it online, it was 34 years old. And then we went further, and we found that the average credit score for someone that age is 653, which is really, really interesting, So, and you've got, Fannie and Freddie's average score being in the low 700s on the loans, the agency loans that are going on. There clearly is, the need for other players, in the market to help these, home buyers that don't necessarily have that score. So with that, I would segue to this. I mean, for the viewers watching, maybe help them understand what's the demographic, what's the borrower and the product that's really getting hammered on over at Angel Oak the most. Who is that person?
I think that's a great question. I mean, there's three categories that I would say, Frank. One is what I've already mentioned, those that have had a credit event, some type of, a foreclosure or a short sale, bankruptcy, and it hasn't seasoned long enough to qualify for agency, and especially jumbo. You start talking about jumbo borrowers, you have to have perfect credit for minimum 5 or 7 years and no blemishes ever since. So that's the first category. So I would say those that have had a credit issue. The second big category is self-employed borrowers who cannot qualify based on their tax returns.
Okay.
We have a documented ability to repay, but it's alternative documentation, bank statements, things like that, and that passes the test from a ability to repay, fully documented. It's just not tax returns, and all agencies require, 2 years of tax returns. Okay. So those are the two biggest categories, and then the third category I would just say is kind of a mixture of programs, borrowers like foreign nationals, investors, government loans really weren't built for those types of borrowers. So those are the big categories: credit events and self-employed borrowers. And you mentioned a credit score. This is a statistic that I ask people all the time that not many people know. 50% of Americans have a credit score below 680.
Yeah.
And so, but 660 is not a bad credit score. 640, that doesn't mean they're bad people. They so half. If you as an originator are only playing in the A paper box, that's 700 plus. That means half of Americans you can't get a loan for them.
Yeah, you're missing out on a big segment of people that could use your help. So we're running kind of long here, so I want to go ahead and wrap this up. But thanks for all the insight. But I'm going to also just let everybody know, if you want to learn more about how you can help people with non-QM, we're doing another webinar with Angel Oak. We're doing it December 14th. And you can click on the Angel Oak banner you see over on your right if you're watching us on the website, or if you're on Facebook watching us, there's a link up above that you can click to register for that webinar, where we're going to go through kind of all this in a little more detail. And what's really cool is you can even kind of sort of run your scenarios past Tom on the webinar of deals you might have in the pipeline right now, or ones you might have not done because you thought you couldn't do them that you still might be able to go get, that type of a thing. So again, that's December 14th. An Angel Oak webinar. We'll go through all this in greater detail. Look, MBA says this segment is going to double. Tom believes more than double in 2018. You're going to want to get into this mix and start doing these products, because there's clearly a lot of people that need these products out there, and obviously nowadays widely accepted by investors and everyone alike. The non-QM products through Angel Oak are something you're going to want to be doing. So with that, Tom, I just want to thank you for being on the show.
Awesome. Yeah,
And,
thanks for having me.
and guys, again, register for that webinar. Leave us your comments down below. Do us a favor, forward this to whoever you think might be able to use it. Subscribe to our show, and we'll catch you guys later at the National Real Estate Post. Thanks, Tom.
Thanks, Craig.